Richard Murphy. I want to talk about another dimension to the future of accounting in the UK, because I think that this is fundamental to reshaping our society after COVID-19. There's a big debate going on what sort of accounts people should have in the future from the companies which dominate our economy. They are now being called PIEs, that is public interest entities, and you know who they are. They are the banks, they are the tech companies, they are the supermarkets, they are the companies like the National Grid who are fundamental to supplying our electricity. They're the water companies, they are the power companies from whom you buy your electricity and your gas, and so on and so on. Now, you know who these companies are and you know how important they are, because literally you could not survive without a supermarket, I suspect. Probably well over 95% of people in the UK could not, and there aren't many of them. So how they behave, what they do, how they treat their employees, how they treat the environment, whether they are sustainable or not, all matter to us as people. Now, the government, through the Financial Reporting Council, which is a quasi-government body, a quango as we used to call them, has put forward a report on what it calls the future of corporate reporting. Whether that will be the basis on which the government will now consult over the future of auditing, when we expect a consultation document to be out within the next week or so, I don't know. But whatever that consultation document is, and however we think about the Financial Reporting Council, what they have put forward is the idea that in the future there should be multiple reports that make up a set of accounts. So one will be the financial information, and they are proposing no changes to the existing financial information provided by companies as a result of their review. This is the Financial Reporting Council review. As if everything is hunky-dory in the world of accounting and financial reporting, which we know full well it is not. But then they are suggesting two other things. One is basically a business strategy report, which will update the investors on how the company is going against its stated goals, profit maximization, its investment plans, its desire to get out of a certain market and into another one, and so on. And then a public interest report, which will cover things like labour issues and the environment and what used to be called corporate social responsibility, whether or not it has supported the chairman's favourite orchestra, in other words, because that's frankly what a lot of corporate social responsibility was. Now, I don't agree with that approach, and that is what this video is about. I do not believe that we should be seeing a future for corporate auditing which puts these issues, labour issues, regulatory issues, environmental issues, outside the financial accounts when they are fundamental to the well-being of the corporation as a whole. How a company treats its employees seems to me to be critical to its well-being. Reporting on whether it has invested in people seems to me to be as important as reporting on whether it has bought new assets. It seems to me that whether it is paying people a decent wage for what they do is as fundamental to the maintenance of its goodwill with a critical stakeholder group as to whether it has serviced its debts. And it seems to me that whether or not the company is moving successfully towards becoming net zero carbon is literally at the core of whether or not this company will remain a going concern and therefore a viable entity in which people wish to invest into the future. Putting all these issues to one side and pretending they are secondary or outside the primary concern of the company, and therefore to be dealt with if and when we can get to them and if and when we can afford them, is simply wrong. We now know that these issues are core to the operation of companies, that they must address these issues successfully if they are in turn to succeed on behalf of the shareholders, the other investors, or, let's be clear about this, society at large, since we are all dependent upon such organisations now, and they are not insignificant in their own right. They are what an accountant would call material. In other words, they're basically too big to fail in any way that would let many of our economies carry on, particularly our local economies carry on, without knowing the well-being of these entities. There are towns in the UK where there's only one major supermarket. Imagine it went bust. That would be critical to the future of that community. So we need to know how these companies are working over all their activities. What I am arguing is that one set of accounts is critical for the future, embracing all these issues. Does that create a problem? Well, according to the Financial Reporting Council and others, yes, it does, because these accounts will be very big, they say, many hundreds of pages. And actually, there are already sets of accounts that run to many hundreds of pages, 400 or 500 pages, and this could increase it to 600 or 700 pages. And my answer is, so what? We don't have to have printed accounts anymore. The vast majority of people don't want printed accounts, and most certainly I haven't seen a set of printed accounts for a very long time from a large company, and I use them almost every day because I get PDFs. And in that PDF I can search for exactly the piece of information I want with ease and ignore all the other detritus, and some of it frankly is detritus, that I do not want to look at. And as a consequence, I can find what I want out of a large document. It is deeply patronising of the accounting profession and its regulators to pretend that those of us who are not shareholders in these companies, and as far as I know, I hope I'm not a shareholder in these companies, I only might be through one pension fund with which I'm linked, and I would rather not be, frankly, linked to any of them because I don't really have a great deal of confidence in their financial well-being at this point of time. But the point is, even if I'm not a shareholder, I do want this information and I do want to find it, and I don't want to be told I'm secondary. And for that reason, one set of accounts audited by a firm who can be held to account for what they do on behalf of all the stakeholders of a company is what I want. And I believe it's what we deserve. And this is the direction of travel we must go in. One set of accounts reflecting all the stakeholder needs and putting all the issues of concern, whatever they relate to, the environment, labour-related issues, anything else we're worried about, into the financial reports is critical to deliver the type of financial reporting we want for a future of the UK, the parts of the UK, the towns of the UK, and of course the wider worldwide community, which is also affected by the companies who report in this country. That's what we want, that's what we deserve, and that's what I'm going to be campaigning for. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.